Yeah.
A very warm welcome, sir. We have the distinguished gentleman here, Viju Surendran. He is the DGM of Union Bank of India for Transaction Banking Group. And we have our very young and energetic CFO from UPL Specialities Limited, Mr. Dhaval Parekh. Welcome, sir.
Thank you. Good afternoon.
Yeah. We just wanted to do this, fireside chat to, have this insight from both a speaker from banking segment as well as from the corporate. So we thought we'd invite you for this.
Thank you.
Okay. So we just wanted to, we know that this critical role, the role of supply chain financing in this, trade, in this very, era of trade turbulence. We wanted to bring this and understand your perspective on this segment, this topic.
Yeah.
Okay. So, sir, just want to understand in this, era of trade turbulence, how is, supply chain being affected, and do you think that working capital cycles are also being affected in the corporates? Just wanted to understand.
Thank you so much, Suhasini. So first of all, thank you so much, first of all, Suhasini, for kind of inviting us here. So I think in the last decade or so, the kind of disturbances on the supply chain that we had, I think every 2 or 3 years we had one or major supply chain disruptions that is happening, starting from maybe the pandemic, the geopolitical situations, the Suez Canal blockage, and so on. And I think those frequencies have only been increasing in the last 1 or 2 years. This obviously does exert a lot of pressure, on the supply chain in terms of longer lead times, which obviously results in increase in your working capital cycles for companies. That does affect to a large extent the smaller size of companies, the global scale companies, because of the diversification and that they have. I think they have been somehow able to manage that particular risk, but especially for smaller companies, this does affect in terms of working capital cycle. What we also see a lot of times is the sudden spikes, in inventories, because there is some other situation that has happened. Your supply chain gets disrupted. Nothing can move out of the factory. Nothing can move in the factory, and especially for a chemical company like ours, you can't have an infinite amount of storage. So when this whole political, the geopolitical issue disruptions happen, the supply chain gets affected, your production gets affected, in terms of margins and everything gets squeezed. So it kind of has a much larger spiraling effect.
So are you seeing that kind of effect now in today's time?
Yeah, of course. I think, as I said, I think the larger companies have been more insulated towards this because of their much larger balance sheet, much larger diversification that they have. But smaller companies who have been focused on a few market, or who have been focused on heavily on imports, lesser on backward integration. I think those companies are the ones who have been largely affected because of this.
And do you think supply chain financing would mitigate this all these issues that we are facing?
Yeah, of course. I think typically if you look at, let's say, chemical companies or other companies in India, we are not the so-called innovators, right? So supply chain cost for us is typically about 60 to 70% of our product price is supply chain cost. Now, anything that goes right or wrong with the supply chain is going to have a long-lasting impact on your margins, on your pricing and everything. And in the world that we are living in today, obviously you can't have an infinite competitive advantage in terms of negotiation, because you have the data available, you have all the market intelligence at your resource. So beyond a point, you can't win on negotiations, because sooner or later your competitors are going to catch up on that. So I think, but in this kind of a situation, having a proper sound supply chain structure, supply chain financing structure, imagine, 20-30 days elongated supply chain, on a product, on a cost of 60-70% of forming 60 to 70% of the product price, that can go a long way, in terms of you going and soliciting customers, especially in a market where you are, pushing for volumes. People are pushing for volumes. You are competing with the likes of China, who have been known for their cutthroat competition. So a 20-30 day stretch working capital cycle for you on the supply side can actually go on a long way in terms of soliciting those customers, winning those customers back to you. So it definitely plays a big role in terms of managing the risk.
Sir, when it comes to from the banking perspective, do you also think that supply chain finance would actually help business tide over this kind of turbulence and this kind of trade turbulence that
Yeah.
is happening?
Yeah, thank you, Suhas, for this question. Basically, during this disruptions, what has happened in basically now that there are trade tariffs or even the geopolitical situations which has arisen, supply chain is giving a better leverage for the companies for the liquidity as well as for their operational convenience. Except more precisely, if I tell about exporters and all, there are certain things which you cannot anticipate in doing that, where this cycle gives some more flexibility to do this and keep their this working capital cycle more enhanced, as well as use that liquidity for some other business while banks are funding this. So one thing I felt in this is a more emerging area of financing for the banks as well, and our churning all the funds also in a better way. We are doing the full cycles in between with a little more risk mitigated. So invariably for the banks also it is a better area of doing that, and increasing the liquidity option for this type of clients, like where are huge distribution setup is there, and the banks having a very good reach can support the dealers and getting the money to the suppliers immediately. So both sides it is clearly hooked. So I feel this is a growing segment in a growing market like India, with more of a digital.
Apart from conventional working capital facilities, I think
Yeah.
there are newer options, newer varieties and structures that supply chain can offer. Right?
Yeah,
So,
invariably the products are also evolving. See, we had one or two products initially like vendor and this one, but now various other types of requirements of the customers are coming, which banks are also factoring in doing through the digital platform. So mostly as it goes in a digital mechanism, the funding cycle, that is, I'm telling about the time of the immediate funding, and 24/7 it is working and more automated. So this is giving an edge to the MSMEs who are really requiring the funds, and giving the corporates the timely revolution of the money what they are having. So that is what I feel. It is a more potential area for the banks to fund, and my delinquency is also very less compared to any other structural financing. This is very low.
this is because of the visibility that you get on the digital.
And beyond that, all other overloads also come. See, regarding any other thing, you have a lot of other documentations and all, and verification. This is all little bit different in this structured type of thing, where you are more comfortably doing this without touching the going to the field and getting into various other aspects of it, of the normal funding by a bank.
So, Dhawan, do you think that because of supply chain, do you think that your actual relationship with your suppliers and your customers is actually bettering if there are flexible structures that banks are offering for supply chain financing? Do you think it will definitely help corporates to have a better relationship with the suppliers?
Yeah, of course. I think the kind of mix of suppliers that we typically deal with, while we deal with large corporates as our suppliers who have abundance of credit available at their own disposal, but a lot of our suppliers also comes from the MSME sector, the small scale sector, and I think that is where this goes a long way in terms of supporting that. I think in today's age, I think unless and until you struck a win-win situation for yourself as well as for your supplier, I don't think so any of those supply chain structures would ever kind of work or become successful. So I think this definitely helps us in cultivating that relationship with the suppliers. If today I'm offering a supply chain finance program for my MSME vendors, for my small scale vendors, they are they are much, likely to kind of support me in times when I, need those in terms of pricing, in terms of delivery, in terms of supplies. And we have seen that actually, happening. So I think that goes a long way in terms of managing that relationship. And digitization just adds, to the cherry on the top, because I couldn't imagine, if 5 years, 10 years back, if we had to, kind of do this kind of a program and outreach so many, suppliers on a monthly or weekly basis. I think with this digitization, I think it has made all of that very much easy, convenient, and simpler. And therefore, we see a lot of interest also from suppliers and our customers and our dealers who are more and more inclined towards this kind of programs, because for them also it is less of a documentary hassle, and everything works just very, very smoothly there.
So, as Mr. Dhaval said, I think on behalf of the corporates, I think supply chain financing is picking up and in a very big pace.
Yes.
Do you think the fintech and bank collaborations is actually helping this entire scale up? What is your thoughts on this?
Yeah, see, the fintechs are giving that tech stack to do this thing. Whatever you tell about the other side, the platform is equipping all these in a very finite time and keeping it more simple. So I had a big client where they have asked to fund at 12 o'clock in the night. See, I'm telling during the month and quarter ends and all, they need maximum sales to happen. So what's happening is that until and unless a fintech is online, I'm not able to do this servicing after the business hours.
So real time,
correct. So this
financing is
real time financing and keeping your, more important, the cycle is getting churned quickly. And for the bank as a whole, we are also dispersing the risk. I am having, when I am having a 100 crore ticket with one single client, and comparing it with so many vendors or dealers, when I am doing, my risk is really mitigated on this. So that way I am comfortable in doing a bigger finance in this segment.
Actually, you are reaching out to a lot of MSMEs.
Lot of MSME. For the banks, when the government is pushing towards the MSME side, here we are really getting a better edge. I am adding MSME volumes to the bank in this area, both sides. If I am
So not only is the corporate, benefiting, having a better relationship, better churn, better working with the capital cycles with the MSMEs,
Right.
or their suppliers and customers on both ends. The banks also,
Right. So basically, I feel it is a good combination. The digital platform provided by the fintechs and the banks with their reach and the capital, they're using better in the available period. They're using it better with the more the risk as well as the operational convenience is far better compared to a normal conventional discounting.
And with integration with the corporates, I think there's a lot of stickiness towards the bank, and there is a lot of relationship building with both the banks and the corporates.
I think the outreach has significantly increased. I mean, credit facilities were always there, right? But with fintech coming together along with the banks, I think the traditional banks have been able to increase their outreach significantly in terms of some of these, supply chain or dealer financing programs.
Yeah, fintechs. One more thing is that for their your onboarding, technical onboarding is taken by fintech.
Yeah.
Then beyond that, for any real-time analytics, fintech is supporting. These are all not in the conventional system of banking. It's not there until a fintechs collaborate. This is not that easy in a normal banking scenario. And for me, more importantly, I am reaching to across the corners of the country wherever the corporate is requiring. That is more important.
That is more
important. See, I am presently, I have got one or two MNCs into my fold only because of this.
Yeah.
See, this system where they are also feeling foolproof to take a bank of us. So
These are the benefits.
the benefits, invariably they are the benefits with fintechs in.
I think we'll wrap up with this, sir.
Thank you
so much for your time.
Thank you so much.
And coming to our, giving your insights on this.
Thank you so much.
Thank you, sir.
Thank you.
Thank you so much.
Thank you. Let's take a picture of the